So I'm excited to welcome everyone. Let's go on stage and yeah, let's start. Do you have a mic?
GM, everybody. I'm excited to speak to all these wonderful people. Thank you for letting me be on this panel. I'll leave it over to you.
Beautiful.
Thank you. This is a new helmet, everyone. Welcome to the.
I think I recognize you every time with this.
That's what I
this
mean.
helmet.
Gotta have the brand awareness.
Cool. So welcome everyone. Thank you for joining us at this topic, at this talk about real world assets. I'm Mariia Yatsenko. I will be today's host, and I'm joined by very amazing speakers, very amazing experts in their products, in their fields. We will talk, as I said, we will talk about utility. We will talk about how real world assets work in DeFi, and we will explore, are we actually tokenizing things to improve things? Are we actually doing this to make the market better, to make finance better? Or we're just doing tokenization for the sake of tokenization, just saying things that are very loud? I'm working at Centrifuge. This is the very OG project since 2017, and we've been through several cycles on the market. We were doing experimentations, trying to like understand how we can improve finance back then. But then I think in 2022 the market really changed, and crypto capital wanted to get more stable yield, more stable assets to invest into, and that's where we've seen a huge amount of tokenized US Treasuries coming on the market. So for example, Centrifuge participated in N1 in the Spark Tokenization Grand Prix, where we had 40 participants presenting their projects with tokenized treasuries. So that's huge amount of companies, projects doing tokenization of US treasuries. But then this year, what I personally see is that it's not enough anymore. Yeah, we are trying to bring more assets on chain. We are trying to do the same scheme. There is an issuer, there is a big institutional allocator, but then is it really it, or is there a next step? So before we dive into that, I would like to go through quick intros and talk more about how, like, where do you work, what do you do, and also what is your stance on tokenization, on real world assets, and how you're actually moving things forward with DeFi and with assets working in DeFi. Let's start with Stan.
GM, everyone. My name is Stanisław Koper, Stash for short. I'm the head DGen at Canary Protocol, and I'm also perpetually finishing my PhD in engineering. So Canary Protocol, we created a digital verifier network in trusted execution environment. In simple terms, we manage the cross-chain communications on top of layer zeros for major protocols. We're securing over $10 billion in TVS, and we're building the first real-world asset-first oracle for institutions, run by institutions, and other major protocols. It all runs in this T for tamper-proof verifiability, and we are the only ones building this because there is no current rails for the actual projects to build real RWA protocols on chain. We have 40 trillion to come on chain. We have 25 billion, but there's still a lot more room.
Thank you, Stan. Vivien,
amazing.
great to have you here. Tell
Thank
us
you.
more about yourself and BingX.
Okay, my name is Vivien Lin. I'm the Chief Product Officer at BingX, and also I'm heading BingX Labs, our investment arm under the exchange. We funded in 2018. Now we serve over 20 million users worldwide, and in terms of derivative trading volume, we're now among the top 5 derivative exchange globally. So what we've done in RW space. There's two parts. The first part is trading, because we are a trading infrastructure provider. So we list the tokens, the RW tokens, and we partner with the market makers to make markets, create the market depths for those projects. And secondly, since we also do our investments, so we're also like trying to find the good projects, those compliant ones, those with license, and those with the underlying kind of like technology revolution to facilitate the adoption of RWA and RWA related projects to hope to contribute something to the growth of the RWA space.
Yeah, thank you. Exciting. I already have a few things to ask you about, like the audiences that you work with, but that will be later. Mike, welcome.
Thank you. Nice to see everybody. I'm MikeMassari. I am a strategic advisor at RedStone. As many of you know, of course, RedStone is the fastest growing oracle in the space. Our job is to provide secure, reliable price data across hundreds of chains and thousands of feeds. Recently, we have released the RWA report, which I'm sure many of you read. And we're really looking into the RWA space, mostly because as per any very secure asset and very delicate asset, RWA need infrastructure and they need the reliability that an Oracle can provide. So very excited to be here and to talk about infrastructure for RWA.
Thank you, Mike. Thank you, my dear co-panelists. So my name is Stephan Tkach. I'm a head of business development at United Network. So from personal perspective, I'm a crypto native. I'm almost 8 years in crypto. And, I had several cases of real on-hand experience on working with RWA cases. So it's kind of like carbon credits pilots and real estate tokenization. And from United Network part, we are a long time focusing on a great, seamless, secure, accessible infrastructure tool in a convenient form of card. Yeah, we are a non-custodial hardware wallet in a card form. And for us, it's crucial things to keep in mind that philosophy, that crypto philosophy, not your keys, not your assets. And we want to provide a real world utility for real world assets. Yeah, it's our long-term plan, but basically right now we just launched it in the mid of July. So we are in the very early beginning. And yeah, I'm happy to be here. Thank you.
Thank you very much. Welcome. And from what I hear, like 3 people were talking more about like about institutional capital, about the market makers. That's actually a very, very, very institutional narrative here. And then you were talking more about retail users, about how their experience is getting better with your product. So I like the natural questions that comes up, like who are we building for really? Is it institutions, is it retail, and like where we are now, what is the stage now? And I'd like to start with Vivien. What is current user that is actually trading or experiencing real world assets on your platforms?
Okay, at BingX, we probably one of the first to list X stocks. That is the tokenized stocks by X stocks, the institution. And we find the response from the market is very interesting because I think this kind of products actually fill the gap, especially for those like emerging country users or users from the underdeveloped markets to access a global asset. So for retail users, they see it as a direct access to US stocks without a stock brokerage account. That is quite crucial for those emerging market users. And secondly, in practice, we see increasing traction on, for example, AI-related names and those high-tech names, as you might imagine. We also see there is the arbitrage opportunity created there because there's a natural price difference between a 24/7 trading nature market and a like traditional financial trading hours. So that is trading opportunities out there, and these opportunities mostly will be catched by institutional customers. But having said that, we still see huge challenge out there. That's mainly from the liquidity and market depths. Because imagine if you are like multi-billion funds, if you want to access a strategy, it's usually will have a lot of like heavy backtesting work, like effort input into the strategy. But if the market only have like multi-million ish liquidity, then you probably won't be able to enter that. So now the market, we see some sophisticated institutional investors are exploring on that front, but still only a few of them really put in money to running those strategy. So we see there's a huge gap to be filled there. This is also where crypto exchange can help, because we have partnership with market makers, we have partnership with the projects and the institutional customers. So we have a better stance on that front to say, hey, let's talk about it. Let's make the market more efficient, more better liquidity. This is one thing. This is more from the secondary market. And from the primary market, I think there's a huge demand from the retail users. In the past, they can hardly have any access to the pre-IPO round. But now with the token, with the Robinhood, like OpenAI, primary market tokens, individuals will have the access to the before a pre-IPO round or even earlier investment round. And since those volume demand is relatively, small compared to the arbitrage strategy. So this is a market more creative for the retail users, and it is also where we see a lot of interest coming from that space.
Nice, very interesting. Stephan, do you think this is the future? This is what are we building for? Or you still do you think the retail users will dominate in the future?
I guess we have to look at it from few different perceptions and a few different aspects. First of all, here exists a permissionless and permissioned dilemma, I guess, because what we have right now currently, it's totally permissioned, and we don't have direct access to our ownership rights. Yeah, we are having only an exposure. So for like with keeping in mind that we have not only Web3 processes within the Web3 ecosystem. For adoption and mass adoption, we should have adoption on-chain rails on everything around the Web3 processes. That means that we have to turn over our perception from classic understanding things that we are doing natively in our real life to this Web3 upgrade of everything and on-chain everything, and only when this event will happen in future, we will have an opportunity to finally provide an real on-chain rights and real representation of rights to the users, to the retail users. Before that, it's gonna be I guess the same story that we had for past 20 years, but with an upgraded new sauce. That's all.
That's an interesting perspective. I think at Centrifuge we were always at the center and watching how the market develops, and of course the equities narrative is very, very big now. Everyone is talking about Robinhood. Everyone is trying to bring equities on chain. But the big discussion around that is actually how we provide the live prices, right? And I think this is very much about the infrastructure as well, not only about liquidity. So yeah, Mike, I would like to understand your perspective, how infrastructure is helping to achieve this, to bring equities and generally real world assets to masses.
Yeah, it's important to connect this also with the conversation that we were having before. So we start by saying, okay, who is our customer, right? Because at the end of the day, our customer could be the asset issuers, our customer could be the chains, our customer could be the people that use those assets and consume those prices. So what we try to do is cater to all of these people. Ultimately, what people buy when they buy an Oracle, or when they use an Oracle, is reliability and security. So the infrastructure needs to be reliable and secure, and needs to be reliable and secure for all of the steps. The permissionless versus permission conversation that you started is actually very interesting, because now RWA are very much in a state in which everything is very permissioned. And by definition, instead, for example, oracles are decentralized. So they try to be more towards the permissionless side of things. And I think that's a very interesting dilemma that we're going towards. So we need to provide the infrastructure, and the infrastructure needs to be secure and needs to adhere to certain standards, but without losing, focus on what our crypto value actually are. So the trust minimization, the permissionlessness, and this decentralization side of things. I think that will be a big challenge, and like companies, for example, like Robinhood that come in, or companies like Stripe that now moving towards chain. I'm curious to see how effectively that would change the perspective of the regular user and what will be important for them. One thing that I always say about infrastructure is that we are in a little bit of a privileged position, because infrastructure is something that sits kind of behind the scenes, and it's something that exists also in Web2, right? So just users, the end users, they don't quite see it. And it's a good thing. If they see it, it means that there's something that doesn't work, right? And the CrowdStrike fiasco, when Cloudflare doesn't work, there's always like some problem, and users get aware of Cloudflare. But infrastructure is very much something that we do for the end user, just in a with a 1 degree of separation type of conversation. So in a way that they don't see it directly, but they consume it and use it every day.
Interesting. Do you think we should adapt infrastructure to the regulation, or regulation should adapt to our needs?
So we should adapt infrastructure?
Should we adapt our product efforts, building the infrastructure to the regulation, or regulation should be more flexible for us to being doing what we want?
I think that so the modularity of it is not just about tokenizing everything. It's just it's important to distinguish what is the data versus what is the policy, and what is the infrastructure for the data and what is the infrastructure for the policy. Obviously, as Oracle, our job is to provide the most accurate, most reliable, and fastest possible prices. And then obviously the policy that are built on top of that data, it's something that is up to the protocol, and it's up to the asset issuers, and it's up to the consumers to do. So I do think that infrastructure should definitely cater to those use cases, but it should not compromise on the values of infrastructure in order to absorb the use cases. By tokenizing an asset on chain, by definition, obviously, people adopt the protocols and the values and the rails that the chain provides, and they do it because we provide those certain values. If we start compromising on those things, then it becomes no different than traditional finance in a way.
Yeah, I agree with you. Actually, I was also looking at how innovative cases appear, because you mentioned that like an Oracle, you have a lot of information, you have a lot of data, right? So you understand what is the user behavior usually is. When I was doing some research about different projects, and Canary actually was interesting, because it seems like you're not only doing Oracle services, but you're also making real world assets their infrastructure. Really interesting to hear how that works, and is it a new case for these assets?
Yes. So the approach with what we saw, traditional oracles, they were designed for crypto assets. They weren't designed for real-world assets. And real-world assets need a completely different kind of class of infrastructure. So for example, we first created the cross-chain messaging on top of layer 0 because we believe layer 0 is the biggest cross-chain bridging protocol, right? And we said, okay, we're going to create a digital verify network in this trusted execution environment. We have guardrails. We use KVM consensus and SSL pinning to prevent man-in-middle attacks. And these are the kind of things that institution needs guarantees that this is going to go through, they're going to move millions of dollars. Okay, they need to make sure that they have this verifiable proof, right? And we secure projects like ETHWarsaw. Recently, Morpho have decided to use our DVN without us even approaching them. So we also did the research first. We compared every single digital verify network that exists today, and we are 10 to 15 times faster. We can scale to billions of messages basically in a couple of seconds. And then we offer basically shared security and dispute protocols leveraging the eigenlayer infrastructure. So now we have a solid base. Now we're securing over $10 billion. There's going to be many more billions coming very soon. That's some alpha for you. I do have a talk tomorrow that I'll be explaining some key aspects of Canary, the Oracle itself. I don't want to go too much today. But now we designed this Oracle with an RWA focus, leveraging this entire backbone that we have today. Because, look, we believe that we need to make sure that you are moving billions of dollars. You need to make sure that your verifiable price fees doesn't go up by a few bips that we've seen happen, right? So we also do something that no other code does, is that our sources are directly from the sources themselves. Unlike, we don't have to rely on validators. So for example, I can't say what partner we're using, but for example, we're using the Bank of Poland as our source. So some people would be like, oh, why aren't you using validators? That's not very decentralized of you. Well, actually, our feeds are designed to be completely secure from outside tampering with all these extra things that we've built on top. So that's why people should trust us, because it's actually the huge institutions' reputation on the line too. And for example, if they did, let's say, get hacked and some price feed did happen, our technology automatically protects the users and won't include those information gathered from them. So we've built everything from scratch, from the needs of these institutions. We're also going to be participating in some accelerators very soon that are real-world asset focused first. And that's why I say we need to, let's say, focus on one thing and be the best at it. And that's what Canary is doing. And yeah.
Interesting that you mentioned sources. And Bank of Poland as an example. This is actually like one source, right? Does it mean that if we're using one source of information?
We're not using, what I'm just saying, we're not using one source of information.
Yeah.
We have multiple sources of information, but our sources are from, let's say, the highest grade institutions in the crypto space and others.
Yeah, but still a lot of data still is like held by one or maybe two institutions, two players, and still like we rely a lot of one big data feeder. Does it mean that we're actually not following DeFi ethos and like relying on centralized information rather than doing it in decentralized way?
Again, this is my personal opinion, is that I don't think necessarily we're going to have silos, right? There's going to be the institutions, there's going to be the DeFi degens, and one person cannot serve everyone. And I think that's the wrong approach to take, because if you're doing the jack of all trades, you're not a specialist in none. And now we're seeing all these oracles going back, okay, we're going to do institutions, right? We're going to build this now, right? So now you have to rebuild everything to serve these projects. And I think my issue is that what happens when, what if it gets wrong? I know if someone gets hacked, it is what it is. Like, this is our nature of a space, but we need to make sure that the rails are there for the people that are trusted. And I could go on about a tangent. I will explain more things in my talk, but I don't want to just give everything now.
Of course. Stephan, what do you think about retail users? How would they perceive that? Is it important for them to understand that like everything is decentralized, real world assets are not reliant on one source of information or like several, but they are very much controlled by someone?
Yeah, thank you. I would love to start with adding to you previous speech. Like a few months ago, I've seen news like about that newspaper about that New York Stock Exchange or NASDAQ, like considering about to shift from 9 to 5 from Monday till Friday work activity to 24/7. And here is a key thing, because for us as crypto natives, yes, for us it's very important to see those type of events that will highlight our powerful aspects. And there is that concrete space where Web3 should definitely actualize and push it forward, because like some cases could be inevitable when the avalanche of different events that are ongoing in the same time so huge that you cannot ignore them. So yeah, so that's where the on-chain adoption finally became in our real life. And I'm sorry for that. Could you please, because I keeping that in mind to add it here, yeah, could you please remind me the question?
How much it is important for users that will on board, like when this event will happen, right? Like we will see a lot of users coming from different perspectives, but will they care, or do they care now about what's on the backstage, what's happening with oracles, what's happening, who's holding the data? Yeah.
Yeah, I could separate this answer to two aspects. First of all, like that Stan mentioned, that we are right now still so early in this infrastructure institutional race. We are like, we almost end our crypto degen native kind of like fun or something like that, and we are shifting to this space where you have to be you have to follow some legislations, you have to be you have to like provide some compliances, verifications, etc. Because without this aspect, it's hard to get to this point where you are truly have permissionless access to some institutional grade assets or something like that. But in the same time, we have two like asymmetry in an opportunity aspect. So what institutional or accredited investors could allow them to do in a TradFi or like in the next way of RWA in DeFi, like retail people cannot allow themselves to do the same things. So it's crucial for us to push this idea of kind of decentralized ID or real ownership or deeds of ownership on chain without wrapping anything, because without that we will lose all common initial sense of Satoshi Nakamoto in the Bitcoin white paper, and it could be hard to us to strive through everything. But for a retail user, I would say, like for the common users that are not really interacted with crypto or right now still not involved in that, I would say that it's a simple case. Visa and MasterCard, everyday usage, billions of transactions, trillions of transactions, billions of users. No one knows how does it work. But in the same time, there is huge infrastructures, huge amount of subcontractors, huge amounts of providers, etc., etc. And like to the standpoint, like we will have a huge competitor race. And right now we are in the beginning, like we're in the beginning of the race. Who create some products, like kinda you don't have to understand what is under the hood, but yeah, what is under the hood, but in general it works seamlessly and no one asks what about it, but still keeps in mind, from my perspective, yeah, that we have to really, like, I like to understand that I really own something. You can also you'll own nothing and you'll be happy. Maybe someone remembers it meme from a World Economic Forum and something like that. But still, right now, almost all of the conversation on a future DeFi and RWA acceptance by retail, for me, it's the same like the DeFi talks before Uniswap came to the market.
Just wanted to jump in quickly. I agree with most of that. I think that you mentioned a couple of very interesting points. One being, infrastructure. Like, people don't care about what's under the hood. Like, let's take a lesson, right, from Web 2. Like, people don't know how Facebook works, right? But billions of people use Facebook as the height of it. People don't know how hosting works. People don't know how YouTube works, but billions of people use it. And I think that is really what we should be striving for. So we should be striving for a user experience that effectively provides the best possible product and the best possible value to the user. And when we think about user experience, most of us just think about, interface. But user experience is not only interface, it's the whole process of onboarding the user, identification. In our case, how the user transacts, how the different tokens, for example, move across the different chains, and what they own, what do they not own, and what is custodial and versus non-custodial. And we should really wrap that in what is the best possible products without the complexity of blockchain. We talk so much about mass adoption. If we want to have mass adoption, it means obscuring the complexity that now we all know and love. And I've been in crypto since 2017, so I know about slippage and about chains and tokens and wallets and all these kind of things. But most of the people, even in institution, they don't know it. They don't really mind that aspect. What they're looking for is the best user experience. At the same time, as you correctly said, it's up to us to uphold these values, right? Because having a better user experience doesn't mean compromising on how you get there. It just means obscuring the complexity so the user doesn't see it. It doesn't mean removing the complexity. So yeah, I couldn't agree more. And I think that a big key factor in all of our conversation, also with what Stan said, is we need to cater to these infrastructure very specifically because they have very specific requirements. My opinion is we should do it in a way that still keeps all of the values and all the things that brought us here there, and doesn't remove them, but just modifies them so they are easier to understand.
I totally agree. At the same time, we still like to issue anything, any fund on chain. You still are using a lot of different actors. You still need a fund admin. You still need a custodian. I mean, it's almost the same amount of a number of actors as in traditional finance to issue a fund. You need legal support, and everyone is involved the same way as they are involved in traditional finance. So it's still quite complicated, I would say. We are not yet there, although there are a lot of right conversations, right narratives that we should strive for that. Personally, I don't think we are there yet, and that's where we should all work for and on. But is there anything that would be more native to DeFi? Is there something that would work differently or works right now? Vivien, do you see any trends right now? Like, what is different for DeFi users, for institutions that are seeking tokenization? What is happening? Like, are they behaving differently? What are the trends that you observe?
From investment perspective and exchange perspective, actually, I think the first and foremost thing I care about is how to, as we discussed earlier, is the user interface or user experience. Because having said all this, like the tokenization, whether the underlying asset is stock or bond or like stripped cash flows, to the real user, we need to think about what's the value added by those products, whether we add an extra layer of security, how we define the ownership, or like whether we can provide an extra trading opportunities, because like people coming to an exchange to trade, or the people like the TradeFi people coming to DeFi, the first thing they are seeking is a yield, whether it's a yield from or return from a yield product or the return from the trading activity. They both count. So from our perspective, as long as this is a place that to provide underlying yield source, we need to care about the infrastructure, the user experience, to lower the barrier for people to understand what is RWA, what is a tokenization, and what is the the utility of underlying assets. For example, we recently got a lot of pitch from the fractional ownership kind of project to sell me a piece of the property, or like a cow, or maybe apartment, all those kind of things. But from my point of view, the apartment itself is not new. The new thing is the guy or the project want to sell the property to, for example, US property to a Vietnam user and in pieces. But let's think about it, whether this is revolutionary. I think yes and no. In terms of formality, it's a new format. But having said that, because we're talking about RWA and we're talking about a highly regulated kind of sector, so we always need to ask ourselves, is it compliant? Compliant means, does that really create value for users? Whether the investor or the buyer of the token can really be benefit from the trading activity or the purchase out there. So this is the key question we are always asking ourselves when we're investing in a RWA protocol. This is one thing. Another thing is from the yield enhancement, because we've seen already a lot of T-bill backed RW projects. We've seen a lot about stock backed or bond backed projects. So from my point of view, I see the utility there is that there's a group of people really need access to those assets. But apart from that, it's mostly from the trading activities. So from that space, what we can do is that we provide a very seamless, very fast, very fair trading environment for whoever want to participate in trading those activities. So we see, as I just described, the interest come from different parties, from different motivation. So the product we need to provide are pretty much quite different. But I think one thing out there is, I think the difference between CeFi and DeFi, or TradeFi and DeFi, is how we build our trust. From the DeFi perspective, the trust is built upon consensus, built upon our trust in the technology itself. And for in the TradeFi space, the trust is built upon a regulatory body or regulatory entity. So stepping into the new era, we are now still on the early stage, but stepping into the new era, I think what DeFi can really change the way we participate in finance and what we participate in the real world is that it really helps us to solve a real problem. Is not only create a new format that we need to learn.
You mentioned that there is still a lot of education that needs to be done. Is it something that you're doing, or you're relying on issuers to do that education?
We did a lot of education work. If you're looking at our website, we have educational web page, and we have explanation. We have AMAs with the project, and we now recently launched our AI Master. That is the AI tools that we give our user to ask whatever they want to know. And for all those initiatives, we want to lower the entry barrier for a common user, a normal user. But still, we need the help with the ecosystem and help with the project teams that really to explain what the protocol is doing with plain English or plain language. That is what we trying to work with project team as well.
Do you have any criteria when you're assessing the assets? What is the threshold to onboard the users? What is the complication for them to go through KYC, KYB?
you mentioned RWA or
Yeah, for RWA.
Okay, RWA first, it has to be a real project. That is a minimum requirement. And secondly, we hope if it is stock backed or bond backed, it's mostly provider access. But if it is a kind of new format of RWA, we really ask ourselves, does it really bring value to the community? If you only sell a cow to me, then probably not, right? But if you sell, for example, the region we operate, people are seeking for stable yield, and they kind of can take relatively high risk, then we probably can source project, provide the ABS or asset-backed security kind of tokens for them to do the yield enhancement. But of course, all those activities, product have to be within the regulatory requirement. That is like how we operate the exchange.
Yeah, I agree with you that education still needs to be done. Although when we were designing this panel, we actually were thinking, like, do we still need to explain to people what real world assets are? And like, if yes, how high level that should be. So yeah, we decided to stick more to utility, to how make them work. But if you still feel that you need some education on that, I guess you guys have a lot of information about that. Stan, do you think, like, when you create your product and when you pitch it, do you still need to do a lot of education on your product, on real world assets in general?
Yes, it depends who you're approaching as well, because institutions, obviously, they most of the time they know what real world assets are. They're trying to put them on chain, and they just like we said, there's no infrastructure really, like fundamentally. And I think also we need to think about it is the entire transparency. Is our space still lacks so much transparency in whether it's from how oracles work or where data is coming from, or is this actually verifiably true? Because you can just give you data, like for example, like okay, I basically have a PhD. I'm going to tell you that I'm a specialist in biomechanics, and I think you've got this disease. You're going to trust me because I have a PhD as a doctor, right? And people still have that same kind of mentality in Web3. We're seeing all these scams, these rugs, and look, at the end of the day, like, this is my personal opinion again, like, I've had the privilege of interviewing many different oracles, and that fundamentally people don't realize it's a downward game because price feeds are for free. And at what point do you realize, oh, actually, we're running out of money, all these billions of dollars that we're securing actually aren't going to be secured because we're going down? I know recently many protocols are pioneering a new OEV solution, which is I'm not going to go into that, but essentially a way to make money, bring back money to the token holders and the projects themselves. But I think RWAs fundamentally will shift our narrative forward because, look, that's where the real money is. Like, the users are great because we need to have proof of concept, but fundamentally, if the institutions aren't coming on chain, because we don't have the infrastructure. You put the 80 trillion of assets on chain right now, every single chain is dead. It's broken because we fundamentally can't do it. So I believe I hope we have more coalitions working together, right? And it's not just I'm the best oracle, right? And look, everyone has their specialities. That's amazing. But why is it going to be I'm number one? That's my personal perspective. But in Canary's perspective, we really believe it's just a matter of time until everyone catches up. We're having new technologies that weren't ready coming on chain. Now we can engineer them, right? Why we use TEs? Because there's billions of dollars backing this hardware, right? Yeah, there used to be hacks back in the day, but now we have some of the biggest, Google, like, everyone is using TEs now, and now it's the safe technologies to implement, right? So it is just a matter of time.
Nice. I think to summarize before we get to the questions, what is like one thing that should change for real world assets to become the backbone of DeFi in 2026? Stan, can you start?
Let's start from that side.
Okay, let's start. Yeah.
Easily. I would love to add to your previous point just for a second. Like, we should have kind of a great super chain of everything that will interact within, like, smoothly and like without any permissioned different type of accesses, because like for us, like from non-custodial hardware wallet, it was a challenge to create a like multi-chain solution inside of of the chip and make it work seamlessly through different chains. It's the same like with oracles, with DeFis, with RWAs, etc., etc. So regarding to your question, I would say that I guess we have to see more on-chain rails for everything aside of Web3 reason. So, for example, like you mentioned about Web2 businesses under the Web3 idea about RWA, and the same thing, for example, in decentralized science for IP intellectual property tokens. It's also kind of RWAs, but the lawyers still right now have not any framework to put the real intellectual property on chain. So like kind of the small things, everything like from this, from that around, and that it will be a huge avalanche of change.
Thank you. Mike, what do you think? What should change?
I do agree with that. I think that having necessarily one like super chain is a solution. I don't think it's the only solution, the only approach. Like what we could do, for example, is having multiple chains, but like not expose that directly to the user, and like of not being a problem for people like yourself to build non-custodial hardware wallets, right? And have solutions for wallets to work everywhere, for example. So I think it's up to us to create those things, and that brings me to the answer to your question, which in really a word will be user experience. Like I touched upon this before, and I think that, as you correctly said, we're not quite there. So in order to tokenize something, or even in order to invest into an RWA, it takes now multiple steps. It takes a specific knowledge. It takes also quite a bit of skill to not fall into pitfalls or into potential scams or whatever problem. So I think that the user experience needs to be built around that. So that's the biggest change that I would like to see in 2026 for sure.
Okay, my answer will be that I actually see increasing adoption from the TradeFi, the very big institution like JP Morgan, Chase Bank, or those very like mega institutions. That is very good sign, and I think there will be a trend in like 2026, 2027. And I'm also looking forward to better or stronger infrastructure, because only with the infrastructure we can make the mass adoption possible. That everyone has a similar or a unified standard to allow this space really interchangeable, and that's how we can build the scalability, how we can build trust, and everything on top of that, the utilities, the tokens, the assets. We have a trusted way to put them on chain, have a trusted way to have them traded everywhere. Everyone can trade anything and anywhere. That's the amazing future.
Nice, love that.
I don't know. I usually try not to be controversial, and I'm not going to be this time. But I do think transparency. Everyone has people don't know what actually happens with partnerships and deals and stuff like that, right? And if you did know, then maybe you'd be like, hang on a second, this is not right. And I would love to see the major projects out there, RWAs, oracles, everyone, to just be like, this is how it works. This is our industry. And yeah, and I'm not going to go into it, but yeah, it's the truth. Like most of the stuff you see is not true.
Yeah, I think this panel is exactly the example for people coming together and discuss things as honestly as we can. And from Centrifuge perspective, we actually also see the liquidity issue, right? That this is very important to have a lot of activity, a lot of liquidity on chain, moving around to make sure that those use cases that we want people to experience are actually possible, especially on exchanges and different trading activities. That's why, like, we're not doing super chain yet, but this is actually the bet that we're doing. We're going multi-chain, so making sure that, and also like chain abstraction, making sure that users and investors, they do not really have to care about what chain they're investing from, as well as issuers. Like they can choose whatever chain they want to issue the funds and accept the investments from the another chain. That's the thing that we think will be the change in 2026. But of course, we want real world assets to dominate, and this will eventually happen. We have 2 minutes for questions. Are there any? Oh my God, a lot of them.
Okay, I'm gonna help you out here. First.
Yes, thank you so much. So the topic is making RWAs work in DeFi, and I don't think they can work in DeFi simply because RWAs are like custodial assets. And maybe instead of doing RWAs, would be a better idea to do like synthetic assets. What do you think?
I can add at this point, we have a great example of gold, PAXG. So no one understands that it's like a kind of RWA because it's a tradable token on almost every exchange, and you could buy like directly on exchange PAXG token, yeah, and then you can put it on your hardware wallet, custodial wallet. It doesn't matter, and then only if you want to redeem it from like in a physical aspect, like physical gold, if you want to redeem it, you just only then you have to go through all of the KYC and compliances. So I guess we have to have more cases like a kind of PAXG, because there is a native RWA but tradable as a cryptocurrency token.
A lot of equity hype right now is around making sure that we can trade equities on chain and tokenize them. But actually, these are synthetic assets. Like they are just tracking the indexes and tracking the prices. They are not really tokenized. So a part of the solution right now is making these assets synthetic already. What like some projects like Centrifuge are trying to do is to make sure that this is actually natively tokenized assets, not just the synthetic ones. So yeah, this is the part of the solution already. It's on the market.
I just wanted to add one more thing. I disagree with you. I think something my granddad taught me before he died, he invested in gold and all these other assets. And if you think about it, like gold and all these like stable assets have been going up all the time. Yeah, they've gone down a bit, but now gold yesterday reached all-time high. And something that I was doing now is I'm actually buying gold on chain, and I would rather have that than like USDT or USDC, because that's actually appreciating an asset, and I think it's a way better. And like boring is fun. RWAs are the thing that will rejuvenate crypto again. You may not like it, like for all the degens. I was skeptical, but actually that's where the money is, that's where the investors are, that's where the capital is. Retail does things, but look, institutions move the world. Capitalism wins at the end of the day. As much as we want to be altruistic and have like this super chain of amazingness, it's not going to happen because someone's going to launch some magical chain with ZK magical something that apparently gives you better finality, right? It's just a game theory.
Amazing.
Yeah, so you can still get gold as a synthetical asset. You can just like, let's say, fork Maker. You can put gold Oracle there, and you have synthetic asset as gold, right? But now that's like real DeFi because it's backed by collateral, whereas just a normal RWA is backed by somebody's obligation to let you redeem the asset, which is custodial. So that's my take, is that it is like custodial, which makes it a CeFi instead. So it's like not fully DeFi.
So would you trust a synthetic asset or an actual gold?
On-chain synthetic asset, because like that's algorithmic.
Isn't it actually one of the questions that we discussed? Do users actually care about custodian in the middle of this structure or not? So I guess you're the user who cares about that side of things.
Yeah, I mean, we just can't call it a DeFi, right? If it's reliant on somebody's custody, then it's like not DeFi by definition. So if we're talking about how we can make them work in DeFi, it's just a dilemma.
So we have
correct.
to, like, your take is that we have to remove this custodial part.
There is a lot of risks about like algorithmic something because we have seen, for example, Terra, Luna, etc., and we are not secured from, like, saved from these occasions in the future if we put all of the assets directly on chain, and it should be invented some like, I guess, weights or correctable like, I can't like, skip it, sorry. So we have to have more secure environment to put like kind of these assets to truly to DeFi, because without that there is a lot of risk to full crash of the system, because any lending asset is like like connected to each other, and if one aspect will drop down, every aspect of the lending protocol could also fall down. So it's kind of like DPEGs of USDCs, Terra, etc.
I think time's up for us, Paulina, right?
Yeah.
Yeah.
Let's discuss. Yeah, after.
Yeah, I see a question, but I guess that will be later.
One more, because this was still one question, so one more.
One more question.
Okay.
Yeah, please.
Bart Antoniak, Predator Protocol. There was a lot of discussion regarding infrastructure and to what extent it should be visible or invisible for retail users. And there was Visa and Facebook examples given. And I totally agree that it shouldn't be visible, basically, right? It's like, you know, benefits over features. My question is, to what extent you guys think it applies to institutional players?
I do think that that applies to some extent to institutional players. And you brought up the example that I gave before of Facebook. It's fantastic, right? And don't think about Facebook, think about AWS, right? So if you're building a website, you know about Google Cloud and you know about AWS, right? If you navigate into a website, you don't need to. So I think that the example still applies, right? And the metaphor still stands. So obviously, if you're issuing an asset like you guys are doing, there's definitely visibility that you need to have in the infrastructure. And more importantly, you need to have visibility in the reliability and the security in the infrastructure. So quite deep visibility into why it's built in a certain way, what is built like, and how. My point was more for the end user. So if I invest in an asset, I should not be caring whether that asset is on a chain or another, or whether I need to use this wallet or another one, or whether if I want to switch it to another asset, I need to set manually like a slippage value, right? So those are the things that I think are important to abstract away. And obscure, it sounds like a bad word, so I would just say more like simplify to the eye of the user. But obviously for the people that are involved within the space, in the same way that it happens with traditional finance, there needs to be visibility throughout, because there needs to be proven reliability and proven security of the infrastructure that we use.
Yeah, I think that's very much what is already happening, that protocols that are doing tokenization, they are trying to abstract the complexity for institutions, for builders. That doesn't mean that they hide something, they just like make pre-made parts of the products that like institution can use. And this is how we in Centrifuge are doing that. We're doing Launchpad, where you have already created contracts that you can interact with, and you don't have to really build everything from ground up. But that doesn't mean that you cannot check how this works or you cannot audit them.
Okay, thank you so much. Huge applause for Mariia, and
Thank you.
Thank you.
the rest of the panelists. I see you want last words, or do you rush out to lunch? Last words?
Thank you very much for joining. Everyone is here still, so please come and talk to us if you have any more questions. Thank you.
Thank you so much.
Thank you guys so much.